Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
Just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's It's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Welcome back to a new episode of Building Blockchains. I'm your host, Jeremy Whaley. It's great to be here with you as we start into our second week of this new venture. It's great to have you joining me. And for those of you who will be joining later, it's great to have you. And I think we got a great show for you today. So let me tell you a little bit about what we have going on. Let's see if I can do all this stuff the right way here. In today's show, we are going to take a look at some market updates and what's going on with Bitcoin, what's going on with XRP, and all the stuff in the world of crypto. We're going to take a look at what's going on specifically with Bitcoin holding support and trying so hard to push to higher highs and kind of gotten a little stuck here. So we're going to talk about that in just a few minutes here. Then we're going to talk about the government shutdown, the GOV. What is that? I have no idea how government became GOV. GOV shutdown. Or is it shutting down? I don't know. Anyway, what gives crypto value? This is the big topic for today. What does it take to give cryptocurrency value? Why is it that crypto has value? And then we're going to talk about how you make money with crypto. So we got a lot to talk about, and I'm certain we're going to get it all into the hour that we have together. So before we move any further, if you haven't done so already, like and subscribe, follow if you're over on Rumble. We've been getting our best followers over on Rumble, so give me a shout out if you're over there on Rumble. And it is great to have you with us today. With no further ado, let's jump in and let's do our market update and get this party started. So let's see if I can do this. I got something new for us today. Instead of just staring at big charts that could be a little overwhelming, put together these little widgets for us so we can kind of see everything in one quick snapshot. And there you can see on the far left upper corner here is Bitcoin currently 105,464, up about a little less than 1%. It was up substantially more earlier today, but it has backed off a little bit and it is trying to rally some more. Ethereum is really the only red one in terms of the basket that we keep a really close eye on. And it's not bad. It's down a little bit over 1%. But, you know, kind of pulling up the caboose here today. Solana's holding strong at 165, up off of its lows from last week. Everything's up off of its lows from last week. XRP, XLM, Cardano, all of these guys are bouncing up off their lows. And the big story that I really want to highlight for you, if you come over and take a look at our Bitcoin trades, is you're going to see, let's see, that didn't work. Let's try this again. If you come over and take a look at our Bitcoin trades queue, you're going to see, as we talked about all week last week, Bitcoin is very much establishing what we refer to as a support. Now, if you're not familiar with that, you'll learn more about that today because I'm going to teach you much more about this concept of support and how we use that to decide when it's a time to buy or to sell a trade. But this support has been building really, really strong for the last several days. And what you saw yesterday and then today is those green candles coming in to push us into back in the upward direction here. But we're running into a solid, what we call a resistance. And so now we're kind of getting stuck in here. And the question is, are we going to get stuck for a long time? Or are we going to be able to break out? That is the million-dollar question. And we're going to find out probably sometime this week. The other one I want to show you, XRP. If you're looking at XRP, it has had a really nice move in the last 24 hours. There's the big green candle right there showing you what's going on. And we're currently at 254, up from just barely over $2. So percentage-wise, really nice move with XRP. Starting to move. Next targets for XRP are going to be up here around $3. If we can push through this resistance at 270, $3 will be our next target, next major target for XRP. So for all of you XRP holders, that is the kind of news that you have been holding on to, waiting for, looking for all this excitement. Because I know if you're an XRP holder, it means you are an XRP fan. Because XRP, unlike all the other cryptos, XRP has a cult following, and they're rabid. And probably if you're watching, you're probably part of that. I mean, I have XRP, so I guess I'm part of the cult as well. Anyway, that's my market update for you today. Not a whole lot to discuss other than that from an update standpoint, but let's get a little bit into some of the headlines and some of the news and what is going on. If you take a look over here at some of these news headlines, XRP price is on the upswing today. Here's why. Well, I'd like to know why. Wouldn't you like to know why? What is it that makes XRP worth more today than it was yesterday? I want to know what happened overnight. And if you come down here and you start reading a little bit, you're going to see XRP price continues its recent momentum, reaching its highest level in almost 2 weeks. Wow, must have been rough. And here's the summary. We jumped over 10% this morning on hope that the new spot ETFs will start trading this month. So, okay, so hope. That's the reason that XRP is higher today. Is that true? You're going to learn more about that as we dig into today's main conversation. Here's another one about XRP. XRP, what's causing it to surge over 12%? And what's, according to Binance, what is the excuse? The excuse is whales are reducing selling. That would help. Easing $650 million in outflow. And right up here, amid ETF optimism and stimulus and shutdown resolutions. So the government was the problem. Are you seeing a pattern? It was the government. It's always a third party's problem. That's what I love about these headlines. They never tell the real story. Take a look over here. Bitcoin, Ethereum, XRP jump as an end to the U.S. government shutdown appears imminent. And if you look at this article, it blames everything on the government shutdown. I'm not sure why. I mean, let's just be honest about it. If you take a look in here, why is it that 40 days ago XRP was rising, we have the government shutdown, and now they're saying that it's back up because the government may not be shutting down? It just seems like we're grabbing for headlines, don't you think? And then here's maybe my favorite. U.S. Senate reaches deal to end the shutdown and crypto pumps coming. As if these two are correlated topics. This is what I love to highlight in my news highlights and headlines here, is how the narrative gets passed through. I'm not going to read all this to you, but the narrative gets passed through as if this is the reason. And what media does is it correlates causation that actually has no reason for causing the moves. And then what happens is the public starts to think, oh, well, this must be what's driving the price. And therefore, government shutdown must be bad. Actually, let's talk about that for a minute. The government's been shut down for 40 days. Who noticed? Did anybody actually notice your life getting substantially worse? I mean, I guess there's some flights that are getting canceled, but outside of that, have you really noticed that your life is getting substantially worse? And that's just because, for whatever reason, the government continues to pay the FAA instead of privatizing it, which we clearly should have done about 50 years ago. But outside of that, it's almost like, hey, the world is moving just perfectly fine, despite the fact that allegedly the government is completely shut down. I don't know. You can decide how bad it really is. You can decide for yourself. You got any comments on it? Let me know, and I'll read them, and we'll share them a little bit later. But the question I want to answer and focus on today is, what gives crypto value? This is a huge question that everybody wonders, everybody needs to answer, and especially as I deal with older clients, the thing that they struggle with the most is you get this digital asset and they say, well, how do you know that it's worth anything? There's no substance to it. It just seems like it's a scam or a scheme or something. They just know that they don't like it. And yet, I would propose to you that cryptocurrency and blockchain as a whole is not just the greatest contribution to the financial world in the last 100 years. This is the financial world of the future. So we need to answer this question. We need to understand what is it that gives crypto value. And I'm going to start this conversation by sharing 5 primary drivers of value with you. 5 primary drivers of value. And the first one is the one that really has the highest popularity in terms of reasoning inside the crypto community, and that is scarcity. Scarcity. The more scarcity that surrounds a cryptocurrency or a crypto coin, the higher the value has potential to be. But scarcity on its own doesn't drive value. All it does is it says there's a limited supply. In the case of Bitcoin, there's 21 million. But there was 21 million Bitcoin in 2011. There was 21 million ever since. There's 21 million in 2009, right? And yet, the value of Bitcoin today is over 100,000, but in 2009 it wasn't. So scarcity alone has not changed. Therefore, scarcity alone can't be the only driver of value. So what else is the driver of value for the cryptocurrencies? And here's the next one, utility. Utility. The more utility purpose that a crypto has, the better. The more utility purpose, the better the demand. The more utility purpose, the higher the practicality. The more utility purpose, the more value potential. That's why you see cryptocurrencies like Ethereum and Solana and so many of these projects that are having incredible values and in many cases have skyrocketing values because there's a huge use case. There's a utility case to be made for the crypto. And utility, for example, in the Ethereum case, Ethereum builds the infrastructure so you can build different projects on top of it, and specifically what we refer to as smart contracts. So Ethereum brought that into the world of blockchain. They brought that into this new world of decentralized finance. That changed everything. And not only did it change everything, it's serving a use. And anybody who wants to build projects that utilize that technology on top of Ethereum, guess what? They have to use the Ethereum token. So there's the demand. So scarcity and utility start to come together. What's another driver of crypto value? And the answer is trust. People have to be able to trust it. The biggest reason that crypto's got an edge today is because people are trusting crypto when they don't trust the government. People say, you know what? I can actually do business with this digital thing and I can actually transact. And I don't have to worry about central banks. I don't have to worry about the government. And I don't have to worry about someone doing a rug pull on my fiat currency. Okay, so trust is a big factor of what drives demand and drives value. But maybe, most likely, the biggest of all is adoption. The way that we create value is by getting more and more people to use it. And the more and more people that we have using it, the more money that's flowing into it, the more fiat value is flowing into it, the more value that's flowing into it, the higher the price goes. The higher the price goes, obviously, the more value that there is inside that crypto itself. So adoption is the biggest one. The only real difference in Bitcoin 2025 and Bitcoin 2009 is adoption. We have more people using Bitcoin today than ever before. You have governments that are buying Bitcoin in the hundreds of thousands. You have private institutions like MicroStrategy that are buying as much Bitcoin as they can. And when there's a scarce amount, in this case 21 million, and you have such a huge demand and huge adoption, the truth is the utility didn't matter as much. Bitcoin, yes, there's a utility factor for Bitcoin, but the utility purpose of Bitcoin is not nearly as much of a driving factor for its value as just flat out its adoption. So scarcity, utility, trust, adoption, and then last but not least, definitely the biggest impact is speculative demand. What do I mean by that? Speculative demand refers to speculators who are looking at the crypto, looking at the opportunity, and they say, this is an opportunity I want to get into. I believe that it's going higher. I believe that this is an opportunity that will pay me, and it will pay me a lot over time. Speculation, plain and simple. Speculation turns into all of the emotions that really drive the factors, or really drive the price, I should say, up or down. Either way, speculation is the primary driver. And I want to spend some time talking about speculation, and then we're going to talk about how we analyze speculation so that we can make some informed trading decisions. So, what is speculation? Speculation is simply the way that people feel about a trade. It's the way people feel about it. And we can sum it up this way by saying markets are not driven by numbers. If you have fallen into the trap of believing that markets are driven by some sort of a fundamental value, if you've fallen into a trap of believing that, because XYZ makes sense to me, then suddenly the value should be this. If you fall into that trap, then it's going to be hard to get out because the numbers do not drive the value. I'm sorry, especially in a free market. Now, if you're dealing with a small laundromat down the street and you're looking to buy it, the fundamental core values, that changes everything. That's really important. But when you're looking at a publicly traded asset, such as a cryptocurrency, the numbers do not make nearly as much impact on the price as you want to believe that they do, which is why these headlines that I keep bringing up are so ridiculous. Whenever you look at headlines like this, let me see if I can bring it up again. The Senate's moving towards a shutdown as travel. Oh, that's the wrong one. To end the shutdown, crypto pump is coming. Why would the government deal create a crypto pump? It doesn't make any sense. Does it make any sense to say that, because of what the government is doing, Bitcoin, Ethereum, and XRP are jumping today? No, it actually doesn't. That is a projection. It's a correlation saying that this is a cause, but it's not an actual cause. And so the more that these kind of stories get out there, the more it impacts what people believe, but it's actually not reflecting the truth. Markets are not driven by numbers. Markets are not driven by fair value. I know nobody wants to believe that, but they're not. If you've ever sat at home and you've looked at your XRP or you've looked at your Bitcoin or if you looked at something else and you see the value going down, the prices are going down, you're like, well, I don't get it. What should this thing be worth? You're asking the wrong question because you're trying to put a number solution to an emotional answer, and it doesn't work. Okay, so if you want to understand it, you have to realize that markets are driven by people. People are the ones that are speculating. People are the ones that are coming in and buying or selling, and they are the ones who are driving the price action of, in this case, the crypto. So if you want to understand market pricing, you want to understand what's driving the price of your crypto, you have to understand the people. That is the answer, plain and simple, right there. You have to understand the psychology of the people behind it. Now, I should probably leave it right there. I've kind of made my point. The driving factor of crypto comes down to scarcity, it comes down to utility, it comes down to trust, it comes down to adoption, but more than anything else, it's speculation. And what is speculation? Speculation is how the human beings who are trading it feel about that asset. And if the human beings that are trading it feel positive, they're going to be buying it. And if they feel negative, they're going to be selling it. So while I could easily end there, and I probably should just for digestibility, I'm not going to. I want to talk about the human psychology and how this drives the price of your cryptocurrency, okay? So if you're understanding this a little bit, give me a little bit of a commentary here. Anything. You can just say speculation. You can say, I get it. Give me a little bit of comments here so I know that you're hearing me and I know that you're tracking with me. And in the meantime, what I'm going to do is I'm going to share with you about human emotion and how it drives the price of your trades. So as I said, if you want to understand the pricing of your crypto, you have to understand that it comes down to people, and people are driven primarily by emotion. Now, they never want to admit that, but that is the reality. Understand this about human behavior. Human behavior, people are driven by emotion. And there's one emotional drive that drives every human being, whether we want to admit it or not, more than anything else. And that is this: people will do more to avoid pain than to gain pleasure or than to get a reward. So when you understand these two primary principles of human behavior, number one, people are driven by emotion. Number two, people do more to avoid pain than to gain a reward. When you understand these two key principles Everything starts to line up differently. Your entire approach to trading, your entire approach to everything starts to shift. And the next thing you need to understand about human behavior is humans buy on emotion and they justify with logic. Humans buy on emotion and they justify with logic. Now, I get it. I'm believe it or not, I'm a human too. And nobody wants to admit that we buy on emotion, but we do. And I want to ask you to invite you to think about your own behavior, your own buying behavior. Whenever you buy something, how often do you turn around and justify it with, well, it was a good deal. If I didn't do it right now, I was going to miss out. If I didn't have this coupon, I wouldn't buy the extra one. Or, you have all the justifications for why we buy things. That's the logic kicking in. That's the logic kicking in. But our core decision process starts with emotion. And emotion is all about feeling. So when we think about the market, you need to understand that the market is driven by emotion. And specifically, there's two emotions that drive the market. Do you have any idea what those two emotions are? You've heard it before, I'm sure. I'll give you the first one. Fear and you probably are thinking greed. Fear and greed, right? Is the two driving forces in the market. Or that's what the media told you. I'm going to suggest, after all these years of helping people learn how to trade, I'm going to suggest greed is actually not the driver the way Gordon Gekko might have suggested. I'm going to suggest to you that most of you are not greedy people. I mean, I've worked with now thousands of traders, and it's pretty rare that I find a flat-out greedy trader. Now, they're there. I mean, I'm not an idiot. I know that they're there. But the majority of the people that I find trying to approach the market, trying to buy some crypto or buy some stocks or Forex or whatever it is you're trading and trying to make some money on it, they're not after becoming ridiculously wealthy and just hoarding everything. That's not their ethos. So why does the media always say that greed's driving the market? Then I got to think about this one day and I was like, greed and fear, they're not even equally paired emotions. I mean, what's the opposite of greed? It's not fear. What's the opposite of greed? It would be benevolence. It would be giving stuff away, right? Greed suggests that we're hoarding something and not fear. It's not the opposite of fear. So, well, what's the opposite of fear? Would be confidence or belief or optimism, faith. That would be the opposite of fear, not greed. Then I realized that greed is not actually an emotion. Greed is a state of the soul. And for all these years, people have suggested that if you were making money in the market, you were a greedy person. And I'm going to suggest to you that I don't think that's true. And I think you should take this word out of your vocabulary because greed is not the driving factor of the market. I've worked with too many traders now to buy into this fake narrative. What really drives the market is not fear and greed. What really drives the market is fear and optimism. Fear and optimism. The belief or the idea, the confidence, the optimism that a trade's going to go higher, that you're going to be able to make money with it. Check yourself on this. Am I wrong? How many of you think, I'm buying Bitcoin because I'm greedy? How many of you are buying XRP because I'm greedy? Probably none of you are going to say that because I don't think any of you are actually greedy. And yet that psychology is also one of the things that keeps people from making money in the market. Because people start to say, and they start to think, well, if I made money, then I must be a greedy person. Why would you think that other than the media manipulated you into thinking so? It's not true. You're not a greedy person. You're an optimistic person who thought, if I buy some XRP, one day it might go to a higher price. I might be able to make some money on it. That's optimism. That's not greed. Now, if you're hoarding into it or you're rushing into it, and you're trying to grab as much as you can as quickly as you can, that also doesn't mean it's greed. It means you're afraid you're going to miss out. So fear is the driving emotion mixed with optimism. And the way the market works is whenever a person is afraid that they're going to miss out or they're afraid that they're going to lose money, it drives them to a buying or a selling behavior. And when someone is optimistic that they can profit, it drives them to a buying behavior or a shorting behavior. This is what really drives the market. And the more you understand that and the faster you conceive this idea that it's human emotion that's determining your price of your crypto, not the numbers, the faster you can dissociate from the story that you're hearing from the media, the faster you can get away from these ideas that, oh, because the government did this, it should be worth this. No, that's not how price is derived. I'm going to show you how price is derived in a moment. But that's not how price is derived. For most people, fear becomes the dominant emotion. It's the fear of loss of capital or the fear of loss of opportunity. For most people, that is the driving factor. For most people, whenever you're dealing with sales, what does your salesman say? Well, if you don't take action today, you're going to miss out. Fear of loss of opportunity, right? Fear is the driving emotion of the market. But optimism, and being sometimes a little too optimistic, is the emotion that gets people to stay in too long or to overexpose themselves or to just keep thinking things are going to keep getting better and better and better and go up. It's not greed. It's optimism. And now that you understand that, you're going to understand the next section where I'm going to teach you about some analysis. You're going to understand that substantially better because you understand what really drives the price of your crypto is not the numbers. It's not what the media suggests. It's not the news headlines. It's not the government. It's not even the whales. Well, they're driving some of it. The whales are driving some of it. But ultimately, what's driving the price and the value of your crypto is the adoption and the speculation that this is going to be a good opportunity to make money. That's what ultimately drives the value of your crypto. So if you're thinking, well, how can I support my crypto project? How can I help my project make more money? If you're buying XRP, or if you're in Bitcoin, or if you're in Solana, or if you're in all of them, how can I help my crypto projects make more money? How can I help the value? Well, the answer is, you've heard people say hodl, hold on for dear life. The reason is because the more you hold, the more scarce it becomes. There's a reason they don't want you selling, because the more you hold on to your crypto, the less supply there is on the open market. And so if they can convince people to hodl, to hold on for dear life, it takes supply out of the market and it helps raise the price. Now, that doesn't necessarily help you make money. So how do you make money with crypto? That's the $1 million question, because I'm pretty confident. I mean, if I'm really honest, in not just about you, if I'm honest about me, none of us, for the most part, got into crypto just to say we got some digital tokens on a digital wallet that was really hard to, get everything set up. Pretty much that's like nobody. Nobody wants to do that. So why do people get into crypto? And the answer is for one reason: they want to make money. Same reason they get into stocks. Most people don't buy into stocks just so they can say, oh, I own 100 shares of American Airlines or whatever. Most people don't do that. A handful of people might do that. But for the most part, people buy into stocks for one reason: they want to make money. Same reason people buy into crypto. Same reason people trade Forex. You do it all for the same reason. So let's answer the real question, not a hypothetical, what should it be worth one day? Do you think XRP is worth $500 one day? It's a bad question. It's actually a really low quality question. Do you think Bitcoin's worth $1 million one day? It's actually a bad question. The question that we should be asking is what we started asking: what drives the price and how do we make money with it? What drives the price and how do we make money with it? And if we can answer those two questions, now we're setting ourselves up to thrive in the world of crypto. So for the next segment, I'm working on getting some transitions here so that we can actually break this up, but hasn't happened yet. So what I want to do for the next section here is I'm actually going to go a little deeper into the analysis. And one of the things I was thinking of last week, and based on some feedback, a lot of feedback, people saying, well, how do I know when I should buy and when I should sell? A lot of people asked that question last week. So I'm going to answer that coming up here in just a moment. So what I'm going to do in these shows moving forward is I'm going to have a little teaching like we just did on the core idea of crypto. The core idea of last week, it was blockchain we were talking about. And we talked about, how crypto is more than just currency. That was what we talked about on Thursday. Today we talk about, well, what drives the value of crypto? That's a core idea of crypto. It's kind of a basics. Okay, now the next question I'm going to answer is I'm going to go into a segment on identifying when to buy and when to sell. And we're going to start to do these 2 segments. We'll do this for a week or so and see what y'all's response is. Let me know how you like it and what you take from it. But the idea here is that I teach you some analysis that you can actually turn around and you can go out and make better trading decisions, better investment decisions with your crypto because you're able to do better analysis. Fair enough? Sound good to you? So with no further ado, let's do that. Let's talk about how do I make money with this thing called crypto? And I'm going to answer it really simply. Money is not made by owning crypto. What? Money is not made by owning crypto. The money is made only when you sell your crypto for a profit. Let that sink in for a moment, because that's a radically different view than the way most people approach it. Let's be honest. Most people are hurting after getting into whatever opportunity because they're afraid they're going to miss out. In some cases, it's justified because prices are moving and it's time to jump in. But they're not actually answering the question, how do I make money with this? If I had a nickel for every person that I know who jumped into XRP when it was too high and they held through the dark years for the last 3 or 4 years, they bought it at $2.50 or $3 or somewhere, and they held when it dipped so low, and they're just holding on because somebody said to them, it's going to be worth all this money. Look, I'm a fan. I'm not speaking negatively about XRP. I'm a fan. Traded it since 2017. It was the first crypto that I purchased. I've done many, many cycles on XRP, and I've only made money with it. I've never lost money on XRP. But I've also never held through the tumultuous times, because my philosophy is I buy at one price and I sell at a higher price. You have to realize people are out here worried that they're going to find the wrong crypto, that they're going to buy the wrong crypto. And so I get asked the question all the time, which one should I buy? Should I buy XRP? Should I buy XLM? Should I buy Bitcoin? What do you think? Should I buy it? And the answer is sure. Go buy it, because here's the truth. Here's a true statement. There are no wrong cryptos. There's only wrong choices. What? That makes no sense, right? No, it actually makes perfect sense when you understand how you make money trading crypto. And I'm going to explain this. You can get part B of that radical thought here in just a moment. How you make money. If by simply owning crypto, you don't make money. You make money when you sell crypto, and specifically you sell it for a higher price than you purchased it for. If you look at this chart right here, you see the idea. We buy low, in this case on this chart, buy Bitcoin at around 20,000, and we sell at a higher price on this chart around 50,000. Now, if you're buying at 20,000 and you're selling at 50,000, you just doubled your money. You made money with Bitcoin. You know who didn't make money with this move? The people who bought at the top because of all the hype and they sold at the bottom? Or the people who bought at the top because of all the hype and they held and they held and they held until they couldn't hold on anymore. And they finally said, this is just trash. What am I doing? And by the way, that's the norm. It's the norm both in the stock market and in crypto and in Forex and in futures and pretty much all financial markets, because the reality is most market participants aren't actually that educated in what they're doing. Most market participants don't quite understand what they're doing. And because the media and because marketers and financial planners who hire marketing agencies and they need you to buy and they need you to give them their funds to manage so they can get their assets under management fees. Because of all this, society as a whole actually is way undereducated on how the financial markets work. So I'm going to teach you right now. I'm going to teach you exactly how you make money in the financial markets right now. But I want you to understand that 98% of society is absolutely clueless. Their idea is that you buy and hold, and eventually it's going to go up after 10, 15, 20 years. And that is actually the wrong philosophy. It's just the wrong idea. So let me show you the right idea. Here's the key to making money. You pick a crypto. You say, which one? And I'm going to say any crypto. Pick a crypto. Analyze its price movement. That's the first step. Analyze the price movement. And when it's trending higher, you buy it. And when it's turning lower, you sell it. And then you wash, rinse, repeat. And it might seem overly simplified to you, but that's actually all it takes to make money trading crypto. It's the same formula that we've been using for years to trade stocks. We're just doing it now for crypto. We're not going to buy and hodl forever. We're not going to hold on for dear life. We're going to buy it. And when it's logical to sell, we're going to sell. And we're going to take the profits. And then the price is going to come back down. You're going to see why in just a minute. The price is going to come back down. And then when it comes back down, we can buy again. Because you have to understand that all trades have opportunities. When I said just a moment ago, there's not any bad cryptos, just bad choices, this is why. Because all cryptos have an opportunity. Now, some have better opportunities than others, but all cryptos have an opportunity. All stocks have an opportunity. All Forex pairs have an opportunity. If the price is freely traded and the price is moving, there is an opportunity. There's a lot of stocks that I don't trade. But if I were stuck and that was the only one I could trade, there's an opportunity. Even with trades that are stuck going flat, there are opportunities. So you have to realize it's not that you chose the wrong crypto. It's not that you chose the wrong stock if you're trading stock, or you chose the wrong Forex pair. It's that you got to learn more as a trader. That's the difference that makes the difference. All trades have opportunities. It's up to you as a trader to know how to turn those opportunities into profit. And what I want you to understand is this core concept. You've heard me talking about it briefly. I want to talk about it in a little bit more detail, and it's this idea of support and resistance. Support and resistance. What are these concepts? You may have heard of them. You might have heard of them. It might sound scary. It's not. Here's what it is. Support is the price point where an asset finds more buying pressure than selling pressure. And the buying pressure drives the price of the asset higher. That's it. Support is the price point where an asset finds more buying pressure than selling pressure, and the buying pressure drives the price of the asset higher. We've already established what drives buying behavior. Emotions, human emotion, speculation, people looking at a price, looking at an asset and saying, I think this could go up over time. And they start buying. Now, in and of itself, you've heard the media say there was more buyers than sellers. It's not actually a true statement. There's actually more buying pressure. But realize that every transaction that takes place, there is both a buyer and a seller. And so the market maker, that's the person that's matching buyers and sellers on the exchange, the market maker, their job is simple. They got to match a buyer and a seller. And so if a buyer comes in and says, I'm willing to buy, let's use round numbers. Let's say I'm willing to buy at $100, but there's no sellers there. What's the market maker do? They raise the price until it attracts a seller. And so maybe the market maker raises the price to 101 or 102 or 103, and boom, a seller shows up and says, yeah, I'll sell for 103. And if the buyer is still in the market and they agree to the price, boom, transaction happens. But it's not a true statement to say there was more buyers than sellers. It's more buying pressure. The actual transactions are a match of buyer and seller. That's why we call it the market price. This is what the market has determined its worth in that moment. What is the price of a crypto? What is the price of any asset? It's whatever people are willing to pay for it in that moment. So one guy pays 103. The seller says, I agree. Guess what happens? A bunch of other people were stacked up, ready to buy. They had orders in there. They had limit orders at 100, 99.50, 99.75, whatever. They say 103. Oh my goodness, the price is soaring. And suddenly they flip their orders to market orders. They're not limit orders. They're like, get me in at any price, any price. And the price starts to go higher as the market makers out there saying, who's going to sell? Nobody wants to sell at 103. Will you sell at 104? Will you sell at 105? And you have to raise the price to attract new sellers. It's a bidding war. It's legitimately what it is. It is a bid opportunity. It's like an auction. And as they keep raising the price higher, eventually someone says, I'll sell at that price. Boom, transaction made. Who else will sell at this price? And so you have the pressure of buyers saying, I'm willing to buy, I'm willing to buy, I'm willing to buy. And the market maker's got to go find sellers that are willing to sell at that price. And that buying pressure is what drives the price of the asset higher. It's that simple. Now, how does that show up in the price action? Here's how it shows up. Take a look at this chart, and you're going to notice something. This is Solana. You're going to notice something. The crypto is absolutely tanking, just dropping. And suddenly, you can see right here, it just found the bottom. And what happened here is the buyers said, yeah, I'll buy here. So understand, while the price is falling, there's not a lot of buying pressure. You had a lot of selling pressure, but not a lot of buying pressure. So people are saying, get me out, get me out, get me out. I want to get out. Who's going to buy? Who's going to buy? Nobody's buying. The market makers have to keep dropping the price. Finally, they found a floor. They finally found a price point where buyers would show up. And you see that the buyers established themselves for several months. And in that moment, whenever this price stopped moving, in that moment, it was a fair market price. The buyers and sellers were in a bit of an agreement on what the price should be at that time. And then eventually you see on the right side, or the middle there, that it started to rise. And it started to rise. And as it started to rise, it had put in this idea of support. The price point where the asset finds more buying pressure than selling pressure, and it causes the price to rise. What causes a crypto to go up? There's more buying pressure than there is selling pressure. If you want to manipulate your crypto and get the price to go up, somehow you have to manipulate public opinion to the point where they say, I want to buy, I want to buy, I want to buy. Because the way that it goes up is to drive more and more buying demand, buying pressure. So what happens up there at the top? We're driving this price up. You know, we buy it down here at, what is that, $20? And next thing you know, it's up here at 200. It's a 10x return. And it slows down, pulls back a little bit, and then it keeps going. Next thing you know, you're at 250, 260, and it stops. It just stops and it hits the wall. Why did it hit the wall? Well, guess what? If you look at the left side of the chart over here, let's see if I can highlight that for you. I don't know if you guys can see my mouse. Can you see my mouse moving on the screen here? If you look at the left side of the chart over here, remember what I said just a moment ago. There's no such thing as a market imbalance. When the ticker tape prints, a buyer and a seller both transacted. That means when you look at this market peak right here at $260, somebody bought. It's not just that everybody sold. Somebody's buying. And guess what happens? If that somebody held all the way through here, what's the emotions that they're feeling? They're feeling, oh, if I could just get back to 260, if I could just get back to 260, get back to break even, I'll get rid of this thing. I'll be done with it. It was a terrible idea. Sure enough, several months later, we're back and we hit 260. And guess who's got an order in there to sell? The poor schmuck who bought back here. The poor schmuck who bought at 260 5 months earlier, 6 months earlier is like, I'm selling. I'm back to break even. I'm selling. How many of you can identify with that? If I could just break even. And sure enough, it's not just that guy. It's a whole bunch of other people. And they start selling. And the next phenomenon shows up. We call it resistance. Resistance is the price point where an asset finds more selling pressure than buying pressure. And the selling pressure drives the price of the asset lower. This is resistance. What causes resistance? For whatever reason, the emotion of the trader says, when I get back to that price, in this case, it's $260. When I get back to that price, I'm selling. And it's not just the one trader, it's the herd of traders. And before you know it, that price point gets established. Now, you'll notice if you look at the way I drew this, it's not just a random price. There's a behavior that's happening here. You can look to the left and say, wow, at 260 last time, this trade went down. At 260 this time, this trade's going down. That's not a mistake, and it's not a coincidence. Because here's the reality about traders. Traders don't really know the value of anything, because nobody knows the value of anything. Anybody who tells you they know what the value should be, they're making stuff up because they don't know. They can make an argument that sounds intellectual. They can make an argument that sounds like they know what they're talking about, but it doesn't mean they actually know what they're talking about. All I have to reference, let's look at gold, let's look at silver, let's look at all the stocks that are overvalued right now and all the hard assets that are undervalued. People have been saying forever the prices were going to be 10x, 20x, and they're not. Why not? Because despite the quote unquote fundamental argument, the reality of the free market is it hasn't gotten there. The free market hasn't taken it there. It is a naive belief. In 2025, you're naive if you believe that fundamental values are going to drive the price of your asset. It's not the way it's going to work. You can believe that. I don't care. I mean, it's your money. It's not mine. But I'm just telling you, you're going to be in these trades for a long time. I know people who've been buying foreign currency and they've been holding on to it for 20 years expecting the value to change. 20 years. I literally have made and lost more money multiple times than most people will ever make in a lifetime in that 20-year window. Buying and holding indefinitely is not, you can do it, but it's not a predictable plan. Like, you're holding on to hope. I know people have been holding on to hard assets. I know people that have been holding on to some of these things for decades, expecting an exponential return. And in the meantime, they're missing out on the opportunity. Many of them have refused to get into crypto because they see it as it's not tangible. I don't know what to do with it. I'm showing you right now on a chart. I'm showing you this was an opportunity to 10x your money in a matter of weeks. If you can identify where that support level is, and if you can identify where the resistance is, and you can buy when you're closer to 20, and you can sell when you're closer to 200 or 250, you just 10x'd your money in a matter of weeks. You just made extraordinary wealth. The kind of stuff that most people would call greed, but it's not greed. That's skill. And it happens over and over and over on every chart of every stock and every crypto and every Forex pair and every futures contract. If it's freely traded in the free market and there's any substantial volume to it, human behavior shows up in the chart and we can trade that. And that's how we make money, buying and selling crypto. Let me show you another chart. This is on, I can't even read it. What is this on? This is on Ethereum. Take a look at Ethereum, and you'll notice that there is a support. Now that I've explained it to you, you'll start to notice that, wow, down here, right around $1,000, buying pressure starts to show up. And you'll notice that it showed up right here in the middle of the chart. It showed up again on the right side of the chart. At the top, what do you notice? We notice that we keep hitting the same price points. We call that resistance. Think of it as a floor and a ceiling, a floor and a ceiling. Once you understand this concept, you start to understand market structure. This concept of support and resistance, this is the basis of all of it. If you just understand this, in and of itself, it can make you all the money that you need. There's other tools that I'm going to teach you that will help you with your timing of when you get in, timing of when you get out. But if you just understand this part alone, at least you won't be completely lost. You won't be sitting here saying, why did my trade sell off? Why is it going down? What's wrong? Was I duped? Were the numbers just off? No, it was the wrong theory. This is the right theory. This isn't a theory. This is a fact. This is what's actually happening. I can go into that later, but this concept right here of support and resistance, this is the basis of market structure. And if you can learn this, if you can learn to identify these key, what we call pivot points, they're key price points, support and resistance. If you can learn to identify them, you can and you will beat the market. Mic drop right there. That's the end of the story. You can and you will beat the market. Now, I would like to take some Q&A. I'm not sure if we have any questions that need to be answered right now. I do have one more segment. I wanted to see how long this was going to take. It took a little longer than I expected, but you know, if you don't mind, I'll just go ahead and teach the next part, because this is the part where you start to really trade what I just taught you. And then you can ask any questions you have at the end, or you can type it in the meantime. All right. So the next part I want to teach is what we refer to as a channel. This is taking the idea of support and resistance, which is your basic framework of how price action works, taking this idea and putting it into a strategy that you can use. And one of the easiest patterns you can use or you can identify is what we call a channel. And I love them because they're easy. It's easy to understand. It's easy to teach support and resistance with this. So let me teach it to you right now. What is a channel? A channel is simply a trade that is stuck moving between support and resistance in a predictable repeating pattern. What does that mean? It means we can make predictable profit. The end. When you have an asset that is stuck moving between support and resistance in a predictable repeating pattern, you can make predictable profit because there's a predictability to it. How many of you have ever looked at a chart for a stock or for crypto or whatever, and you're like, that looks random? How many of you are looking at this next slide right now and you're like, that looks random? And yet, this is a stock. I just wanted to articulate the example with this. This is the Russell 2000. You'll notice every time we get down to 164, boom, buyers show up. Every time, boom, buyers show up. Every time, boom, buyers show up. If you can identify that, if you can look at a chart and you can recognize this is where the buyers show up, do you think maybe you might want to join the buyers instead of the sellers? Like, what a novel idea to look at this and say, you know what? That's where the buyers show up. I'm going to, instead of buying at the top when everybody else is selling, I'm going to buy at the bottom when everybody else is buying. And if you can learn to recognize the next part, which is look up here, right around $200, the sellers start to show up, and it's like clockwork over and over and over again. Every time we get to about $195, $200, the sellers show up and the price goes back down. So what if you could take this philosophy, what if you could take this idea, and you can learn to buy as it's bouncing up off of support? As you see it hitting that support level, and you see it starting to move up, what if you were to buy? And what if when we got to that resistance point that you had already identified, what if you were to sell it and you were to lock in $20? Most people, if they know what they're doing, they look at a trade like this and like, that thing's going nowhere. It's just stuck. It's going flat. But like I said, there's opportunity everywhere. There's more opportunity every day in the market than you could do in an entire lifetime. And I'm talking about stocks, crypto, futures, Forex, every market. There's more crypto trading opportunities every day than you could do in an entire lifetime. There's more stock trading opportunities every day than you could do in an entire lifetime. There's more crypto, I already said crypto, there's more Forex. There's more futures trading opportunities every day than you could do in an entire lifetime. So if you're sitting here saying, well, I just can't find any opportunity, it's not that you bought the wrong crypto. It's not that you found the wrong trade. It's that you didn't know what to do with the opportunity in front of you. That's what I'm teaching you. So instead of buying and holding and 9 months later saying it didn't go anywhere, what if you buy as it's bouncing up off of support, and as it runs into resistance, you sell and you lock in $20. And then when it drops back down to support and it bounces, you do it again. And if you missed one of them, you do it the next time. And when it gets back to resistance, you sell and you lock in another $20. And you wait for it to come back down. And when it bounces off support again, you buy again and you sell at resistance. And then when it does it again, you rush, rinse, repeat. If you had done that on this trade from June through, it was an 18-month window, June of one year to December the next year, there was $80 per share profit, representing nearly a 50% return on your investment on a chart that the media said was flat. A chart that the media said was boring. A chart that the media said had no gains. It's not that there was no opportunity. It's that people didn't know how to recognize it. Now, I know I'm using this as a stock example. Same thing happens in crypto. The only thing with crypto is it's more volatile. So let me show you what I'm talking about. Take a look over here. This is Bitcoin. Do you recognize support on Bitcoin? Wow. There it is. Hanging out around 72 to 75,000. And do you recognize resistance hanging out up here around 105, 106? Wait, isn't that what we're hitting today? Interesting. So you notice that we hit this major resistance area twice. 1, 2. And then we sold off. And we found support at the same price point. 1, 2. And we rallied. And where did we go? We went right back to the same price point and stopped. What? How did they know? It's not that it was mythical. It's not that it was magical. It was predictable. We actually knew what was happening. This was a trade that I set up in our Sunday night classes, giving the buying signals and the targets. This is what we do with all of our trades. Why do we do it this way? Because it's predictable. Now, if you had bought Bitcoin down here at $75,000 or $80,000 and you rode it up to just over $100,000 and you sold it after it kept hitting the same price point over and over again, you would have made about $20 to $30 per, I want to say per coin, 20, 30,000 per coin. Just depends on how much you had, right? I think that's pretty good little profit in about what, 3 months, 2 months? Most people wouldn't argue with that. It's better than you can do with most stock trades, unless you know what you're doing. Better than your financial planner is giving you. But what do most people do? They say, no, I want to buy, we're going to hodl, buy and hodl. And so they did, and where did it go? Once you break out of resistance, what do you think happens? A new resistance gets created. Okay, so we broke out of resistance. We went and we hit the new all-time high. And guess what started to happen? 1, 2, not twice, but 3 times before it started to sell. And when it starts to sell, where does it go? It goes right back to where it came from. Only this time, what was functioning as resistance becomes a price zone that starts to function as support. And this is a very critical concept here. It's a concept that says this. It says old resistance becomes new support, and old support becomes new resistance. Old resistance becomes new support. Old support becomes new resistance. These ideas work together. They work together. So here's the strategy. It's really simple, and you can apply this. You can do this. All of you can do it. Identify a trade that's moving between support and resistance. Buy as it's bouncing up off of support. Sell when you get to resistance. Wait for it to fall back to support. Do it again. Do it again. Let's go look at an example over here. We're going to come over to our charts. And I want to show you, because some of you are thinking, but it doesn't always come back to support. Oh, does it? How many of you that might be watching right now have been trading XRP? Would you believe me, other than the fact you're going to think I'm bragging, but would you believe me if I told you I sold my XRP right here? Why did I sell my XRP here? Because I sold it before right here. And I recognized the price structure. I recognized what was happening. I have it on recording telling my class we're coming back down to the $2 range. And I even said to them, if we drop below $2, you're probably going to come close to $1.40 to $1.80. And in the one day when we crashed, that's what happened. This is not a mystery. It's not random, folks. This is exactly how price action works. And look where XRP has stabilized. It's stabilized right here along the line. The line that I just magically drew in there, right? And look where we're starting to do today. We're starting to bounce. Why am I optimistic about XRP today? Because XRP is bouncing off of support, not because of the ETFs, not because of the government potentially shutting down the shutdown. XRP is bouncing off support because it's support. That's where the buyers show up. Mind blown, right? I can go trade after trade after trade and show you over and over again how this works. It happens on every trade. Let's take a look at Bitcoin after all. Okay, so we just looked at it a little bit. Bitcoin, everybody's excited. They're fearing missing out, so they're driving the price higher and higher until we can't sustain anymore. Right around 124,000. We actually hit 125 briefly. And then the selling pressure came in, and where did it go? To the previous pivot area. And then what do you see in the media? Oh no, are we going to miss alt season altogether? Is there no alt season coming? What is alt season? Who said alt season needs to exist? What do we see from the media? Bitcoin's crashing. It could be done. Are we getting into another dark era? What did I tell you last week? No. We're building support right where we should. Once you see it, and once you start to understand it, you can't unsee it. Once you understand that price action is predictable, you can't go back to thinking it's random. Because it's not. If this is exciting to you and you look at this and you think to yourself, I need to learn to trade like that, visit me over at trademaestro.com, because this is how I teach all of my students to trade, including you. Of course, you don't even have to come to trademaestro.com. You can just simply like and subscribe and follow me here on Rumble, over on YouTube at Trade Maestro at both, rumble.com/trademaestro, youtube.com at Trade Maestro. You can find us on Telegram. You can find us on Facebook. And you can find us here tomorrow, because we're doing this show tomorrow. And tomorrow I'm going to teach you some new techniques on analysis. I'm going to show you a few other things that you can use to apply to your trade so you feel more confident when you're buying in and when you're getting out, so that you know that you're on the right side of the deal. If you got any questions, type them in here. Otherwise, I will see you tomorrow. Thank you for being here. I look forward to another great day tomorrow. I wish you all the best. Happy trading, and we'll talk to you soon.